The world of finance can be a tumultuous sea, with storms brewing and waves crashing at any moment. In this video, we will explore 10 money rules that can help you save money during a bank crash and stay afloat in the face of uncertainty. Rule 1. Keep cash on hand. Ahoy there, mate! When it comes to navigating the treacherous waters of a bank crash, having a stash of cash on hand can be a life raft to keep you afloat. While digital payments and credit cards have made our financial lives easier, a bank crash can leave us high and dry without access to our funds. This is why it's essential to have a cache of cash on hand to see you through the rough seas. But how much is enough? I hear you ask. Well, it's a tricky question as it depends on your financial situation and needs. Some suggest having enough cash to cover your expenses for at least a few weeks, while others recommend having 3 to 6 months worth of expenses. Whatever the amount, make sure it's enough to cover essential expenses like food, utilities, and transportation. So, why keep cash on hand when you could keep your money in a bank account? For one, during a bank crash, atoms may run out of cash or become inaccessible due to power outages. Also, banks may limit the amount of cash you can withdraw at one time, leaving you without enough to cover your expenses. So, be a savvy sailor and keep a stash of cash on hand. It may not be the most comfortable or convenient option, but it can be a lifesaver when the storm clouds gather. Rule 2. Open accounts at multiple banks. By spreading your funds across multiple banks, you're not only diversifying your financial assets, but also mitigating the risk of losing access to all your funds during a bank crash. This strategy ensures that if one bank experiences problems, you still have access to the funds held at the other banks. Furthermore, having accounts at multiple banks can provide you with other benefits such as better interest rates, lower fees, and more personalized customer service. It also provides you with a broader range of financial products and services that can cater to your unique needs. However, it's important to be strategic about which banks you choose to open accounts with. Consider factors such as the bank's stability, reputation, and the products and services they offer. Don't forget to also consider the fees and charges associated with each account, as they can eat into your savings. Rule 3. Use credit unions. Credit unions are not for-profit financial institutions owned by their members. They offer many of the same products and services as traditional banks, but often have lower fees and better interest rates. Additionally, credit unions typically have a more personalized approach to customer service, treating their members more like family than just customers. During a bank crash, credit unions can be a safe haven for your funds. They are regulated by the same federal agencies that oversee banks and offer the same protections, including FDIC insurance. This means your deposits at a credit union are just as safe as they would be at a bank. But the benefits of credit unions don't stop there. They often have a strong focus on the local community and can provide more opportunities for small business loans and other financial support. Plus, credit unions are often more willing to work with their members during tough financial times, providing flexible payment options and other assistance. Rule 4. Keep important documents safe. Make sure you have copies of essential documents such as your driver's license, passport, social security card, and insurance policies. You'll also want to keep copies of your banking information, including account numbers and login information, in case you need to access your accounts from a different location. When storing your important documents, make sure to keep them in a secure and waterproof location. A fireproof safe is an excellent option, or you can use a safety deposit box at your bank or credit union. Additionally, consider keeping digital copies of your documents in a secure online storage service or on a portable hard drive. It's also crucial to keep your important documents up to date. Regularly review and update your insurance policies, wills, and other legal documents to ensure they reflect your current financial situation and wishes. Rule 5. Diversify your assets. We'll get to that in a second. I have a favor to ask of you. If you like this video so far, please subscribe to the channel. Diversification is a crucial strategy for any savvy investor, but it's especially important during a financial crisis. By spreading your investments across different asset classes, you can reduce your overall risk and increase your chances of success. One of the easiest ways to diversify your assets is to invest in a mix of stocks, bonds, and cash. Stocks provide the potential for high returns but come with higher risk, while bonds are less risky but offer lower returns. Cash investments, such as savings accounts and money market funds, provide stability and liquidity. But diversification doesn't stop there. You can also consider alternative investments such as real estate, commodities, and cryptocurrencies. These can provide diversification benefits and potential high returns, but they also come with their own unique risks and challenges. It's essential to have a diversified portfolio that aligns with your risk tolerance and financial goals. Work with a financial advisor or do your own research to determine the right mix of investments for your situation. Rule 6. Be prepared for bank holidays. During a bank crash, the government may declare a bank holiday, which means all financial institutions must close their doors. This can be a scary prospect, especially if you need to access your funds during this time. That's why it's crucial to have a plan in place for bank holidays. First and foremost, make sure you have enough cash on hand to cover your immediate needs. You can also consider opening an account at a credit union or another financial institution that is less likely to close during a bank holiday. Another option is to keep a credit card with a high enough limit to cover your expenses during a bank holiday. Just make sure you pay off your balance as soon as possible to avoid accruing high interest charges. It's also a good idea to have a backup plan for receiving income during a bank holiday. If you receive direct deposit, make sure you have a plan in place to receive your funds if your bank is closed. Rule 7. Don't panic. During a financial crisis, it's easy to get caught up in fear and anxiety. But panic can lead to impulsive decisions that can ultimately harm your financial well-being. Instead, take a deep breath and focus on the things you can control. Review your financial situation and make a plan for how you'll navigate the crisis. This may involve cutting back on non-essential expenses, increasing your income, or adjusting your investment strategy. It's also essential to stay informed about the situation. Stay up to date with the latest news and developments, and don't believe everything you hear. Stick to reliable sources and seek advice from trusted financial professionals. Remember, you're not alone in this. Many people have navigated financial crises before, and you can learn from their experiences. Consider joining online communities or local groups where you can connect with others who are going through similar situations. Rule 8. Stay informed. During a financial crisis, the situation can change rapidly, and it's essential to stay up to date with the latest news and developments. This can help you make informed decisions about your finances and adjust your strategy as needed. One way to stay informed is to regularly check reliable news sources. Keep an eye on financial news outlets, government announcements, and official statements from your bank or financial institution. You can also follow financial experts and commentators on social media or online forums. This can provide you with a range of perspectives and insights into the situation. Another important source of information is your financial advisor or other trusted professionals. They can help you navigate the crisis and provide guidance on how to protect your assets and investments. Rule 9. Have a plan. Your plan should include several key components. First, identify your priorities and goals. This may involve prioritizing certain expenses or investments, or developing a timeline for achieving your financial objectives. Next, consider different scenarios and how you would respond to each one. For example, what would you do if your bank were to fail? How would you access your funds and pay your bills? Your plan should also include steps for protecting your assets and investments. This may involve diversifying your portfolio, moving funds to a more stable financial institution, or taking other steps to mitigate risk. Remember, your plan should be flexible and adaptable. Financial crises are unpredictable, and your plan may need to change as the situation evolves. Regularly review and update your plan to ensure that it remains relevant and effective. Rule: seek professional advice. During a financial crisis, it's essential to seek out guidance from experts who can help you make informed decisions about your finances. This may include financial advisors, accountants, lawyers, and other professionals who specialize in navigating financial crises. These professionals can provide you with a range of insights and expertise, from developing a comprehensive financial plan to navigating complex legal issues. They can also provide you with an objective perspective on the situation, helping you make decisions that are in your best interests. When seeking professional advice, it's essential to choose someone who is experienced and trustworthy. Look for professionals who have a track record of success in navigating financial crises and who are transparent and communicative about their fees and services. Remember, seeking professional advice is an investment in your financial well-being. By working with experts who have the skills and knowledge to navigate a bank crash, you can protect your assets, minimize your risks, and emerge from the crisis stronger than ever. As we've learned, financial crises can be unpredictable and challenging to navigate. But by following these 10 rules, you can prepare yourself for the worst and emerge from the crisis with your finances intact.